Commercial property is falling. Let's have a look. Good afternoon, everyone. Florian Heise here, and welcome to another episode of HeiseSays. I've got my afternoon shine, and I thought we'd have a look at an article that was sent to me by a viewer. It's to do with JP Morgan selling St. Collins Lane. Now, before we go through this article from today, let's go back in time and have a look at another article from CoreLogic. This is just from 2016. It's a short one and we'll have a read through it. St. Collins Lane sold to JP Morgan Asset Management. Now you think, JP Morgan, large business and asset manager, they're bound to make good, sensible business decisions. So, JP Morgan Asset Management has purchased the retail centre St. Collins Lane, Southbank, following its $286 million purchase of commercial tower 28 Freshwater Place, Southbank, in August. JP Morgan Asset Management has bought a Melbourne retail asset for $247 million. The sale of St. Collins Lane, formerly the Australia on Collins Retail Centre, was arranged by Simon Rooney of JLL Melbourne. The purchaser, JP Morgan Asset Management, is part of JP Morgan Chase & Co. and is a global asset management leader providing world-class investment solutions to clients and has a history dating back over 200 years. The vendor was La Salle Asian Opportunity Fund 3, an unlisted opportunistic property fund established in 2007 and managed by US-based LaSalle Investment Management. According to Melbourne Cityscope, St. Collins Lane is a 5-level retail centre with over 60 specialty shops, several restaurants and a food court with seating for more than 750 people. The centre underwent a refurbishment worth $35 million in early 2016. So it's just been refreshed a few years ago, something that's happening to more and more of these retail centres. Now remember, we've had a look at recent other commercial property, retail property holders and trusts that are divesting from their platform. Stocklands is one as well, among others. Major tenants include TAG, Politic, Brinstock, Sandra Paris. I don't know who any of those are, with more national and international brands set to open soon. The sale sees La Salle exit the centre completely, having sold the hotel that tops the retail centre for $237 million in September. They had previously bought both assets in 2 parcels between 2011 and 2012 for $204 million. So, from 11 and 12, I'm assuming that's both for 204, they've more than doubled their money. They offloaded the bottom for 247, the top for 237. So, they made quite a reasonable profit. But what's happened now? What's happened to JP Morgan? Well, as of Friday, today, JP Morgan offloads St. Collins Lane. JP Morgan Asset Management has listed luxury Melbourne Mall, St. Collins Lane, at a significant discount on the price it paid just 3 years ago. JP Morgan paid $247 million for the asset at 216 Collins Street in November 2016. Then vendor LaSalle Investment Management offloaded the centre following a $30 million refurbishment on the aging Australia on Collins Mall. I wouldn't say they offloaded it. They sold it for profit. They sold it for a significant profit, holding onto it for 5 years, doubling the money that they put into it. Okay, they did a refurbishment of 35 mil. What were the operating costs? A couple of mil a year? I think they did well. It seems like a good investment. JP Morgan is now divesting a 100% interest in the asset for around $150 million, sources say. So look at that. They bought it for 247, or let's round it up, 250. they've taken 100 million off the cost of it. 100 million. In how many years? 3 years? 4 years? So in the previous 4 years, when things were going crazy, perhaps like this year, the foreign investment coming into our residential property, foreign money coming in, driving up those prices. Now what's happening in this sector? 100 million down. We're seeing again and again and again, there's retailers going under. There's a retail recession happening here. Large commercial property trusts and investment organizations are starting to divest out of these assets, but they're still throwing money into them. We've had a lot of work, guys, where we've been doing work for surveys where they'd get point clouds done to these retail shopping centers to refurbish them because they've had to, just to compete and to keep clientele coming in the shop. So 100 million, that is a huge cut. That is a huge cut. The one-of-a-kind retail precinct attracted international flagship stores, including US global UK fashion brand Reiss, on reopening in mid-2016, but has since struggled with high vacancy rates across its 4 levels, with a reported 45% vacancy rate in 2017. 45%. That is. Well, here we are starting to see the impacts of the retail recession that Australia has had. But 2017? It's only just going to get worse, guys. It is just going to get worse. The 9,301 square meter premium retail centre in Melbourne's Golden Mile comprises about 45 specialty tenants, dining precinct, and a mix of proximate luxury fashion and lifestyle. Prominent luxury proximate. What am I thinking? Prominent luxury fashion and lifestyle brands. Okay, so hoity-toity showing off purchases that people, that given our wage growth has kind of failed in the last few years, I can't imagine people would not be cutting back on this discretionary spending. CBRE's head of retail markets, Simon Rooney, said the centre's Collins Street address, combined with its significant value-add potential, would generate significant interest from both local and offshore investors. Premium CBD retail assets are always tightly held, rarely traded, and continue to be one of Australia's most pursued retail investment opportunities, Rooney said. Well, why? When they've plunged in value that much over such a short period of time, why are they being sought after? Don't people follow the news with what's happening? The fact that our cash rate is so low, what does that tell you about consumer confidence, guys? It's already bad. I guess. I mean, these are real estate people. They have to. They're playing in the commercial sphere, and they have to talk it up. The recent closure of anchor tenant Debenhams in the wake of its departure from the Australian retail market, far from adding to the mall's woes, offers significant upside potential for an incoming purchaser, Rooney said. Okay, sure, mate. Sure. We anticipate an extremely competitive domestic and international buyer pool for St Collins Lane, particularly in light of the unique opportunity to reposition the centre and undertake a highly strategic tenant remix following the recent departure of Deb, Rooney said. So, you can buy this and invest a whole heap of money in it to get it back onto. Is that a David Jones in there? Oh boy! And despite persistent challenges in the retail sector, including a downturn that saw an unusual number of store closures and retail collapses this year, Rooney said St Collins Lane underlying retail fundamentals remained strong. Support by more than 240,000 predominantly white-collar workers within a 1 kilometre radius of the centre, together with above-average retail expenditure per capita. In an economy that is most likely going to be heading into a recession, where unemployment will be going up, guys, and where now people are not even going out. They're limiting their discretionary spending. They're limiting their travel. Perfect time to invest in a property. It's been marked down for a reason. So Collins Lane draws from one of the largest retail catchments in Australia, with an annual retail expenditure pool of $67.9 billion, which is forecast to experience robust growth of 4.3% per annum to 2036. Sure it is. Sure. I wonder what black swan events they haven't taken account in that growth anticipation. How many times do these, growth over 16 years? Okay, sure. We'll see. The St. Collins Lane listing comes as the Expressions of Interest campaign closed on Thursday for another Golden Mile landmark. The 2,232 square metre David Jones owned 299 Burke Street GIC is also looking to offload its Myer Melbourne store in the heart of the mall. Well, there you have it, guys. A huge cut, offloading a large retail property in the heart of Melbourne. $100 million off in 4 years. What do you all think? What do you think this tells us about the confidence in this sector? Let me know your thoughts and opinions in the comments below, guys. Please like, share, and subscribe. If you're a fan of the channel, there are a few ways you can support us. You can join the channel here on YouTube and make a small monthly donation. You can support us by joining the channel on Patreon, by also making another donation. You can use our affiliate links at Amazon or eBay for your consumer purchases, or Kucoin or Independent Reserve for your crypto trading. We have merchandise for sale from the HeiseSays website, pocket squares, you can see on the link below, and finally PayPal if you want to support us that way. Thanks everyone, and I'll see you in the next video.